Today in crypto, the entire cryptocurrency market has just seen a big sell-off. Just what the heck is happening? Well, we can look to Bitcoin to understand the wider picture of what is happening in the cryptocurrency market, and there are a few simple reasons that I believe the markets are down today. And I'm also going to tell you whether I am buying or selling cryptocurrency right now, and if this sell-off is even anything to get worried about. My name is Lark, and this is where you subscribe for all of the hottest and all of the latest happening out here in the wild, wild land of crypto. So let's talk about Bitcoin. It has been a brutal 2 days for the big orange coin, with the price down around 16%. These are the kinds of moves that can really shake out the uninitiated in the ways of the market. For real though, 16%, that's not pretty. That's not cool. In fact, it went so far down that we even saw Bitcoin break under $10,000 on a few exchanges. And you know what that means? Guys, it's the last chance to buy Bitcoin under $10,000. So did you miss getting Bitcoin under $10,000? I didn't buy Bitcoin under $10,000, but I would have had an ordering, because it's a good price to get it at. But for real, guys, one of these days, when we say Bitcoin, last time buying under $10,000, it's going to actually be true. Anyway, now I am a bit disappointed, though, to see us closing under $10,500. That move effectively means that we have broken out of the range, thus really invalidating the sideways movement thesis that we've been discussing here for a while. It also means that $10,500 failed to hold as a meaningful level of support, which is kind of disappointing considering what an area of incredible resistance that was previously. We also lost the 50-day moving average, which is also not super awesome by any means. The one silver lining that we do have here right now is that we are still well above the 200-day moving average, which is around the $9,000 mark. Now, as long as we maintain above that line, the market is bullish, which I know might not really seem super logical on a day like today when everything's kind of in the red. And while you may not like to hear this, a good correction is healthy for the market. If you're newer, it can be kind of hard to stomach. If you've been around for a while, you're probably taking a nap as all this is going on. But as a reminder too, the previous bull run had multiple brutal pullbacks, some of them 30 or even 40%, but they didn't fall under the 200-day moving average. Anyway, what am I doing personally? Well, not a whole lot, to be honest. I have been and will continue to be dollar cost averaging into Polkadot. I'm working on kind of building up a decent sized position in that. So I'm kind of taking a few weeks off of my normal Bitcoin and Ethereum dollar cost averaging. But if the deals get much better for Bitcoin or Ethereum in the coming days, then I might consider gobbling up some of those as well, since of course I do always have a good stash of stable coins on the side in case of an emergency dip buying situation coming up. Deals are looking pretty good today, though. It's definitely, I think, a situation where a lot of people will be shopping the drop, and certainly shopping the drop in an uptrending market tends to be a good idea if history has proven anything true. Be greedy when others are fearful. That is the name of the game. Now, is it wrong to feel a little bit excited on these pullbacks? Maybe a little bit, but I think the point quite simply here is that I'm buying cryptocurrencies still. I'm not selling off my cryptocurrencies. And these kind of sell-offs, they don't really bother me at all. This is not the end of the bull run. This is just a bit of a, fasten your seatbelts kind of turbulence, and I do remain bullish on the market overall. A big thank you to CRYPTODOTCOM for sponsoring today's episode. On September 8th, you will be able to get your slice of their $2 million sale of Bitcoin at an incredible 50% off rate. The sale is marking the exit of the exchange from beta to fully operational Death Star. They are also running a promotional offer paying you 0.1% for making trades. So instead of you paying them to trade, they pay you to trade on the exchange, which is pretty gosh darn awesome. Now, if you do need an exchange account, then there's a link down below where you can get signed up for that. And if you want to get your hands on one of the super popular Crypto.com debit cards, well, they are currently shipping to many countries around the world, including Singapore, the USA, New Zealand, Australia, the Philippines, the UK, the EU, and soon coming to Canada as well. Now, you can earn some very generous cashback rewards using these cards. So every time you swipe, you can get 2, 3, 4, 5%, depending on which card tier you get. You also get some pretty awesome additional perks like free Netflix and free Spotify, premium lending rates, airport lounge access, again, all depending on which tier of card you get. And with this current market dip, you can grab a ruby red card for only around $150 right now. And if you use the link down below in the description, you will also get a $50 bonus when reserving a ruby red tier card or higher, effectively making it $100 to grab a card, which is a pretty awesome deal. Okay, so let's dive a bit deeper into the reasons behind today's sell-off. Well, obviously, we just had to fill the CME gap. So simple, Lark. What are you talking about? Nothing matters but the mighty CME gap. It must be filled. The universe demands it. No, but seriously, guys. So, look. There are some factors that I believe really explain what is going on here. The first one we're going to talk about is the miners. So the miners have actually been offloading stock, so they've been selling Bitcoin. That always, of course, creates selling pressure in the markets when you have the miners, which are some of the biggest holders of Bitcoin, selling Bitcoin. Evidence shows us that large-scale mining pools are sending higher than normal amounts of Bitcoin to exchanges over the last few days. And look, I don't think that this is the primary driver for the sell-off, but this is just something that's probably adding a bit more fuel to the fire, so a factor to consider. Now, another possible factor is that the DeFi market is having a cool down period. Ethereum fees reaching $200 or $300 or $400 just to do a smart contract interaction has effectively priced the majority of users out of the market. Uniswap fees, $30, $50 again, pricing most users out of Uniswap, which is, of course, the most popular decentralized exchange out there. Now, this could represent a short-term slowdown in economic activity for Ethereum DeFi. Other chains, though, they are right now scrambling to pick up the slack. Tron is up 100% in the last few days as yield farmers are migrating over to Tron to get themselves some of that tasty yield. And farmer fatigue may also be setting in as a slew of exit scams and garbage clones and bad code have flooded into the market. And by the way, if you think that the DeFi bubble has popped, oh, no. not by a long shot. But it is perhaps time for a bit of a cool down after the meteoric rise. And look, those reasons, they kind of make sense and they sound nice, but the truth is that the crypto markets do not live in a vacuum. Far from it. We are massively influenced by the movements of the traditional markets. Let me submit my first piece of evidence here for you. This is the dollar index. You see, even though the dollar broke a key line of support a few weeks ago, which is the blue line on the chart here, it had a nice little turnaround of about 1% today. Now, you can see recently that when Bitcoin has gone up, the dollar index was falling, and when the dollar index rises, Bitcoin falls. And just what is driving a dollar rally over the past few days? Well, concerns of the European Central Bank is saying that the euro has become too expensive, causing the euro to have a bit of a sell-off and Forex traders to move back into the dollar. But to be honest, I think that the main reason that Bitcoin has seen such a big drop today is that the S&P 500 has also seen a big drop today. Many people may not like to admit this, but quite simply, Bitcoin, and thus by extension the entire cryptocurrency market, is increasingly tied to the fate of the equity markets. by most accounts. The equity markets are currently massively overvalued, having reached really just these new all-time highs this week. But we've reached these new all-time highs for the stock markets at a time when economic data is looking super, super grim across basically all metrics. So today's market drop, unsurprisingly, hit a lot of mega tech stocks like Apple quite hard. In fact, it saw a 13% drop in the last 2 days. In fact, fun fact for you here, Apple lost more in value from its market cap in the last 2 days than the entire market cap of Bitcoin. That's crazy. Anyway, I feel like in many ways, Bitcoin and of course the crypto markets overall, it's really tracking quite closely to the tech stock sector. Obviously, it is hard to compare apples and orange coins, but it is food for thought for you. Anyway, is this the start of a new bear market for the stocks? I don't know. I doubt it, but especially not coming 2 months before the US election. I would be very surprised if they didn't just pump crazy amounts of money. And the Federal Reserve has already made it abundantly clear, as we've discussed at great length on the channel, that it's going to go to the ends of the earth to ensure that the markets and investors do not fail. It will pull every lever it has. It will print until the problem goes away. So probably just needs more stimulus to make sure the markets keep going up. By the way, I'm still dollar cost averaging into stocks, so I haven't been shaken out of that market. I do that on a weekly basis. Not a massive amount of money, but I just keep buying them. Long term, I think none of the short term noise really matters all that much. But back to Bitcoin. Everyone wanted big money to get into crypto. Here's the evidence. They have done that. Congratulations. And now, of course, we can see the results. The new Bitcoin investors, the big money people getting into Bitcoin right now, they're really not treating Bitcoin as the revolutionary form of money, the new paradigm of money, any of that stuff. They're treating it more like a stock or a gold ETF. That's kind of what they're doing with Bitcoin right now. For them, it's an investment vehicle for an exciting niche industry, something they can make money on, a risky one, so they drop it at the first sign of trouble. But one thing definitely working in Bitcoin's favor, though, is that we do have the same value proposition as gold for the macro investor crowd. And right now they are buying gold, and to a lesser extent they are buying Bitcoin, but that is to an increasing extent they are buying Bitcoin because orange coin is starting to catch on in these circles, and that is important for us in the long term, so we can have a bit more disconnect from the stock markets. But anyway, am I worried? No. I'm not worried. My thesis on cryptocurrency is unchanged by short-term price action in the stock markets and short-term price action for the crypto markets. But of course, those are just my two Satoshis. Your question for today, do you think that the market dump has just begun? Is it going to get a lot worse before it gets better? Or do you think that that was it? You're now out there buying up the dip, shopping the drop. And if you are shopping the drop, what the heck are you buying? Like I said, the only thing that I bought this week was Polkadot, but definitely I'm keen to hear what you are getting into, what you see as having a great value to buy during the dip. Let me know down below in the comment section. Thank you so much for watching today's video. Hope you're having an awesome day. Long live the blockchain, and peace out till next time.